Good afternoon, Chris.
Hi, Ninder.
Thank you for sparing the time today. So, for those of you who don't know, and those who are listening and watching, Chris Guy, you're a director at RLK Solicitors. You're based in Birmingham, Edgbaston, and you're rapidly growing, and you've got some interesting stuff around managing risk. I thought this would be really appropriate because I cannot think of an environment as of today now being May 2025, where risk is on everybody's radar. Now, there are two types of risks. There are uncontrollable risks you're aware of, actually you can't do anything.
That's right.
Tariffs being one.
Mm-hmm.
But there are also risks that you're aware of, but you're not sure what to do about them. Mm-hmm. And as somebody runs a business, which is what you do, and your business is advising other businesses on how to manage their risk. So I thought this would be a really appropriate time in probably the most riskiest of all environments to perhaps have a conversation about how you can manage risk. So let's look at some of the obvious ones then.
Absolutely.
They say you're only as good as your people.
Indeed.
People will say we are in a people's business.
So, for myself, absolutely.
Yeah. So Chris, how, if they're your asset, by definition, they become your biggest risk/liability.
Yeah.
So how would you advise someone to reduce the risk attached when it comes to people?
I think the starting point, Ninder, is an employment contract or a service level agreement if you're a director of a company. It's the contractual position between the business and the person. It's the framework and it's the foundations, the building blocks to protect yourself, really, and that's something that we're heavily involved in. Restrictive covenants are really important in an employment contract, which restricts an employee from deciding tomorrow, actually, I don't want to make money for Ninder anymore, I want to make money for myself instead. I've got this client database that I've built up during my employment with Ninder, but I could just go and run off with that and make it, for me only. So that's something that we get involved with quite a lot.
So here's the thing about risk then with people. People vary.
Yeah.
Different sectors, different terms of contracts. And if you look at a footballer, they have a fixed term of contract. Mm-hmm. So when you employ people, would you suggest a fixed or an open? And if it's open, how do you again still protect yourself from people not adhering to what they're supposed to be? In other words, are there common terms that everything's there, and then you have an element of specific terms? Does that make sense?
Absolutely.
I'm trying to think how you.
I think you've got to think about what the situation that you're facing as a business. Do you need to service a piece of work that's only got a certain shelf life? Because what you don't want to happen is be lumbered with an employee if the shelf life of this product or service only lasts, say, a year. You don't want to be, or 2 years, you don't want to be lumbered with that person thereafter. So in those situations, a fixed contract would be absolutely the right idea. Whereas if you've started a new business or you're onto something which you know is something that can continue and can grow, then why wouldn't you look at an employment contract that doesn't have a fixed term, that you can work with that person? But then again, this comes down to the contents of that employment contract. You need to think about notice periods, to think about restrictive covenants. We've spoken about that. You don't want them running off with your clients. So, I mean, an example of one of those cases that we've dealt with recently was a financial advisor company, and it wasn't even an employee. It was one of the directors of the company who holds a fiduciary duty, and a fiduciary duty means that they hold a duty to act in the company's best interest, decided the next day, I'm going to take all of these clients, set up in competition, set up on my own. So instead of taking a 50-50 cut, I'm going to take a 100% cut. And we were contacted by the company and said, we've got a real problem here, because this financial advisor company, the main clients on their books were footballers who, as we know, earn a lot of money and therefore have a lot of excess cash to invest. So it was a huge blow for the company. And fortunately, they had an employment contract that was in place, which gave a framework which we could work to that was enforceable, because there's so many out there that either don't have it, or if they do have it in there, it's been drafted incorrectly and it's unenforceable. An example being, you say, you can't poach any of our clients for 5 years anywhere in the UK. That's totally unreasonable, because the way the law sees it is anybody can earn a living. You've just got to act fairly. So if he decided tomorrow I'm going to leave the company, a fair way about it would be you don't touch any of the clients within, say, a 5 mile radius for, say, 6 months, because that gives you the opportunity to work around this problem that you've got, to mitigate that risk and get somebody else in to service that work that all of a sudden has just been taken from underneath you.
And this term gardening leave.
Yes.
I mean, is that another way of stopping people taking your clients, is to put them on a...
Yeah, I mean, it's one way of doing it. I'm a firm believer that you don't always need to do that, because if you've got a strong policy in place, it should be enough deterrent in the first place to stop them from going and doing what they intend to do, poach clients. I think it looks quite obvious sometimes when somebody's on garden leave that all of a sudden they've been dealing with their client relationship manager for many years, then all of a sudden it just stops like that. Because the way that a lot of clients see that person is not just the person, it's the business, it's the company itself. So all of a sudden, again, the rug gets pulled up under from them, because all of a sudden the person they've been dealing with for all that time suddenly stops. It needs to be a gradual handover rather than straight into garden leave.
So I think, and there's great comments, so I think it is about customer level, it's customer service, It's all about the brand, because you don't want the brand to be ultimately tarnished.
It's a big risk.
And I suppose my next question is somebody who come from a music industry perspective. We used to have huge contracts, 40, 46 pages long. To a certain extent, and here I'm bringing the emotional bit in, a piece of paper is fine, but actually when relationships break down, is the paperwork there mostly to protect you? Because once the relationship's broken down, it's broken down, isn't it? It's just gone. And what do you do there then? Do you just rationally cut the contract early and say, look, or do you stick to the contract? What do you think from a risk perspective?
I think the contract is key. You always go, the way that the law operates is it will always go to the contract. And sometimes a contract can not even be on paper. It can be an oral contract. That is a thing. So you go to the contract, but you need to look at it from a I call it business efficacy. It's what makes commercial sense. Because the relationship may have broken down, but if the contract can't be fulfilled going forwards, then there's got to be a different way out. And that's where the contract's so important, because you'll have clauses towards the end, typically in a contract. When things go wrong, what do you do? And typically it's things like mediation, arbitration, worst case scenario, going to court proceedings. And you'll see at the end, governing law. This contract is governed by the law of England and Wales, blah blah blah. That's the worst case scenario that you're getting to. But a good contract will show you what you should be doing, both sides, both obligations of both parties, and what you should be doing if it goes wrong. And it should be drafted sensibly.
So sticking with people, so people you employ are an asset, it can be a risk. And what about your partners? And I'm talking about your business partners. Because a lot of businesses start with a handshake. A lot of businesses start with the right intentions. It could start with two people, but once they have families, it gets complicated. I'm thinking about succession planning and all kinds of things. So what should you do there then when you set up day one? Because a lot of people don't have no paperwork. I'm assuming you're going to say there should be paperwork.
There should. And I think that one of the main reasons I get instructed is because there isn't any paperwork. It's gone wrong. And as I mentioned, what happens in that contract, there should be something in there. If it goes wrong, you follow this process. It's a shareholders agreement. That is the key document that most people miss when setting up a business. And let's face it, it's natural. People do it. It starts off something small, and before you know it, it's snowballing and it's built into something really successful. But just think to yourself, if I'm in that position, if I'm setting up now, or I've set up recently, or if I set up a long time ago and that isn't in place, shareholders agreement is the most important thing.
And you must have seen some
or a partnership agreement. Depends on what type of business you are. If you're operating as a limited company or as a partnership, whatever it is, get that agreement in place. It's key.
And I suppose that would have the same term that if something goes wrong.
Yeah, absolutely.
This is what you would
absolutely.
do. Okay, so that's another aspect of people. You're selling and buying all the time.
Yeah.
And you hear about people suing each other because someone didn't do what they were supposed to do.
Yeah.
So I think you're going to say to me, you should have something in place for people that you buy from.
Indeed.
And people you sell to.
Indeed. Get your contracts in place. And not just who you buy and sell to, but also your suppliers as well. You may subcontract. You may use somebody else to assist you in providing that product or service. Get it in place, because, again, I've been instructed far too many times where there isn't something in place, and it can be a real problem. But with that framework in place, again, you're really mitigating that risk, because anybody, with one in place, will go to it to look at, actually, yeah, you're right. These are our duties, these are our obligations. Fair play, we'll fix it, and we'll fix it within 30 business days because that's what the contract says. Perfect. You've mitigated the risk there. Without it, it's a bum fight, and if the relationship's broken down, it's not an easy, not an easy thing to deal with.
And again, you go back to the contract.
Indeed.
I see lawsuits all the time around naming rights, around intellectual property.
Yeah.
When businesses set up, not only do they generally not have a shareholder agreement, but nothing even occurs to them around the brand name, checking the brand name, registering the brand name. So that's another risk, because you could go out of business if someone pops around the corner and says, actually, naughty, that's my name.
Indeed.
Again, so,
and it's not just the name; it's the colour of the logo. It's sometimes it can be the font. It's a very complex area of law, very complex. And I think the bigger you get, the more riskier that gets as well.
As in your company gets bigger.
Yeah, because the brand awareness gets out there as well. I'm aware of companies which infringed Silicon Valley type companies. I'm not going to name any names, but innocently via a marketing agency, and they had a knock on the door by a Silicon Valley company who, you can imagine the money that they've got behind them, and it was very worrying for them, and they quickly had to rebrand.
Crikey, that can be not only expensive,
reputational damage as well.
Indeed, because you've had to change your name.
Absolutely.
I've seen that happen in the events game, where people have named their event very similar to somebody else, and eventually just had to shut down. So again,
I think it can be a very unfair part of the law as well. Actually, as a lawyer, I respect the law, but I think that it's an area of law which can be rather unfair. I won't name any names, but you're aware of other Silicon Valley companies that use a single letter in their brand, and that single letter, putting that in front of a word, can change everything. How's that fair? Just one single letter, but it is.
Okay, so we've looked at people in terms of employment, people in terms of partnerships, and in employment we've talked about people who potentially, because you're in the service industry, they could pick up a lot of clients and walk off with them. So we've talked about how we can, protect ourselves. we've talked about people who supply you products. You need to make sure that the right quality comes in at the right time, and if they don't, you have something in writing to be able to go back to them. Equally, you need to make sure that your customers, you have a contract with your customers in case they claim you haven't done. And I think one of the places, I think you have to really keep an eye on, if you take digital, is your website.
Yeah.
Your terms and conditions, that could be where actually both your suppliers, particularly your customers, will go looking for if they want something back.
Yeah.
So I think that's important. I think you've just said IP is important.
Indeed.
So these are some of the risks that are all controllable, that you can control. Anything else before we move on to a particular contract I'd like to chat to you about? But was there any other risks you think a business that is in their control they can take on, in addition to all of those?
I think from a non-legal perspective, as a business owner, it's keeping that regular referral of work coming in and not putting all your eggs in one basket. It's having multiple sources of income, and whether that's a website along with a shop front sales, force behind it. Don't put all your eggs in one basket, because if something all of a sudden dries up, you haven't mitigated your risks there, and could be left in a bit of a tricky situation. Having to move quickly.
Yeah, I think one of the other risks, particularly small businesses do, is they don't what I call environmental scan.
Yeah.
They don't scan enough what's going on around them.
Absolutely.
And they can't see the threats that are coming.
Yeah, and they come quick.
And that can, and I speak as someone, and I've said this before, in the music industry, we never saw the threat of the internet.
Yeah.
And Spotify and downloading and
YouTube,
streaming and all of this stuff.
Yeah.
And that was a risk we just didn't see. We didn't know what we didn't know. So those are, I think, risks. Let me pick something else up now. Let me pick up a risk, and I was interested when I met up with you. A risk that was not in our control, but actually, depending on your paperwork, and this is the bit that it sort of rocks up, you can make it as part of your control system. And whilst you're not an insurance broker, you understand, as we've just discussed, risk. Now, we had monumental outside external risk in 2020, which was COVID.
Yeah.
That was huge. Nobody knew what to do. Nobody saw that risk. It was 100 years before, I think, the last one
Spanish
happened,
flu.
something like that. So it was a risk that we never saw. Back to the what you don't know, you don't know. But as a business, most of us are insured for business losses when a risk hit us. Most people, I think, thought they couldn't claim, but I think you're going to tell me there was an uncontrollable that actually you can make as a controllable. So tell me, am I right? I mean, I was fascinated when you said to me. So for the benefit of viewers and listeners, explain to me how an uncontrollable, something that happened to us from outside the business, actually you could actually benefit from in terms of insurance.
It all happened from myself as a business, thinking, I'm in this situation now, and it was in February 2020, where there was scaremongering happening at that point. Italy was in a bad state, Spain was in a bad state, France was in a bad state, and obviously China was horrendous from what we saw. And Boris Johnson, from memory, was talking about how things are going to get worse and potentially would go into a lockdown. I thought, from a business, that's not good. That's not good. We've got clients to service and employees to look after, and keeping ourselves going. So I thought, how can I mitigate this risk? And what's one of the most important documents that we haven't actually mentioned yet is an insurance document. The insurance policy is one of your key ammunition in your arsenal for a business. And I thought, I've got to dust off our insurance policy. And I looked under the business interruption section, which not many people realise is a free bolt-on. So most people think, well, I'm only insured for flood, fire, theft, employees' liability, public liability. I've not insured my business for an interruption, especially not a pandemic. Actually, most people have, and they just don't realise it. So, dusted off our policy. Long story short, got a couple of policies with two different officers, and both of our insurance companies, different ones, were saying no. And this was pre-pandemic officially hitting. 23rd of March 2020, Boris Johnson said, we need to close down. So after that, I said, right, I've definitely got a claim now. And they still said no. So I thought, well, if you're saying no to a solicitor, you must be saying no to all of my clients. And lo and behold, they were. So for the last 5 years, since the start of the pandemic, we've been at the forefront bringing these cases and continue to do so, acting for thousands of clients, and have successfully overturned decisions for the majority of clients, because they either didn't think they had a policy in the first place, or secondly, their insurance company or insurance broker were wrongly denying it. They were saying no, when in fact there is cover.
So let me get this right.
Yeah.
The pandemic, because we all stopped.
Yeah.
So you're telling me that meant because we stopped, we made losses because we couldn't operate.
Absolutely.
I mean, as somebody who runs an events business, we couldn't do events.
Of course.
We had to stop. We had to cancel everything for a year and a half, whatever it was. So you're telling me anybody in business who literally had to shut down for a year and a half can now claim, and how much could they claim? How does that work?
Typically, it's one of the higher of these two things.
Okay.
The cap on the policy. So what a lot of insurance companies do is put a policy limit on the amount that you can claim. They don't want to have an open checkbook, so they're mitigating their risk by saying, on the flip side, we'll only pay out, say, £250,000. You might have lost £1 million, but we'll only pay £250,000. So that would be the situation. If you've lost £1 million, but there's a £250,000 cap, you could claim the £250,000. And there's other arguments that we argue to get more, like adding interest on top of that, adding damages for distress and inconvenience for the amount of time that you've been without that money, and legal costs and things like that. So there's things that can be added in addition to that. Say though that they had a £250,000 cap, but they only suffered £100,000 in losses, then it's only the £100,000. It's the lower amount, because you can't be claiming on an insurance policy for something more than what you've lost.
So I'm trying to work out how you'd use what number. So would you take the previous year's profit and loss account that was audited and given to HMRC to say, look, that's your typical trading, that's how much profit we would have made, but because we lost that entire year, then is there an instance where a insurance company might say COVID is not one of those risks that we typically would look at, like fire and theft? Is there an escape clause? Is this where most people thought we can't claim? I
think going to your first question, how would you calculate that loss? That's a really good way of doing it. It's a really simplistic way of doing it. Comparing it to last year's accounts, really simplistic. But let's face it, what a lot of businesses actually do, year by year they get better. Because what's the point in being in business? You want to grow, don't you?
Yeah.
So a lot of them are on an upwards trajectory. Yeah. So what we do is we work out not just that last year, but look at the year before that, and just try and calculate that curve. Because what a lot of these insurance policies do, they have a clause in there that talks about trends. So if that business was, say, doing 10% each year better and better, actually it shouldn't be just last year. It should be on an upwards trajectory. So that's the way that we look at these things. And actually, I've had clients as well, horrible situation. They'd set up the week before the pandemic. Yeah. Some clients actually had set up, and all of a sudden, wow.
Yeah.
And
I've heard of them.
There's a few. And so what we have to do is look at projections, look at management information that they'd given the bank, for example, if they'd taken out a loan to set up the company. So there's lots of ways around it. We've got a chain of opticians that had just opened up a new branch. We could use the data on the other branches, the other offices, to say, well, it's a like for like, similar size. That's the sort of losses. So That's how we calculate it. Can they get out of these claims? In some circumstances they can. If they have drafted the policy wording correctly, then yes they can. But actually out there are over 500,000 policies that do engage. 500,000 businesses out there have a case.
Right. For them to have excluded it, would they have had to mention the word pandemic?
Yeah.
In other words, you are not insured against pandemic. Is that the only way they can? I'm talking about the insurance company.
There's a few ways around it. They can provide no business interruption insurance in the first place. Very rare. Most do. They can use the word excluding epidemics and pandemics. Only 2 insurance companies I know before the pandemic did that. Since then, every single one does. So this is a case that will never come again. And then there's a final cohort where the insurance companies have been, smart, fair play. Most policies will say we will cover you for any interruption by an infectious or contagious disease. It's a really wide definition that can include anything, including new emerging diseases like COVID-19. But some of them will say there's an A to Z list of diseases, and if they define that and it doesn't use the word COVID, then that's one way around it. But as I say, there are over 500,000 businesses out there with these policies that do engage. It's a phenomenal amount.
I remember when we were trying to insure our events post-COVID.
Oh, you won't be able to.
Yeah, people were just saying, sorry, we're not going to insure it on anything around COVID again.
And yet look at Wimbledon. They were insured. Wimbledon got called off because of COVID. It's one of the biggest sporting events in the year, and they got a payout.
Wow.
So it does exist.
Wow. Eligibility, anybody?
Yeah, any SME, any business, not just an SME, any business.
And the fact that most people haven't claimed, is that because they simply just don't know?
I think it's they don't know, or they were wrongfully denied. They were told no at the time because, we've had to take these to court. We've had to have these heard in arbitration behind the scenes. This is, when we talk about risk, the biggest risk that insurers have faced in not just a lifetime, in centuries, it was the COVID-19 pandemic.
Huge,
it affected the whole world.
Huge.
Their whole book of business was exposed all at once. And what's the insurance company's business? It's betting. It's a gamble. I'm going to bet on you that your business doesn't set on fire. And if they get it wrong, they have to pay out a lot. As we've seen, billions and billions and billions. But the fact of the matter is, it's a calculated risk. They do have those reserves, and there's a contract in place that they should adhere to it. And that was my argument all along, that these companies, these businesses have paid good money for this insurance policy, and they should be compensated.
So COVID happened in 2020.
Yeah.
I've always been aware of something called a 6-year rule.
Yeah, that's
can't
right.
claim back more than 6 years.
Statutory limitation.
So is there one here?
Yes, yeah, March 2026.
So it is the same 6-year thing?
Same
then?
6 years. It's a breach of contract claim. So 6 years. So the earliest is March 2026. So we're not far away.
And how long does it take from me sitting opposite somebody like you to actually being resolved? How long? And what are the steps involved?
Best case scenario in terms of timescales, we were instructed 2 weeks ago on a case. We've had an admission of liability and a payout already within 2 weeks. Yeah, client is over the moon.
Wow.
And the day before, she rang the insurance company before instructing us to say, I'd like to make a claim, and they said no.
Stewart, pass me my phone. I'm going to make a call.
Yeah, so best case scenario, 2 weeks. We've still got some insurance companies where we are adamant that they are wrong, and we know they're wrong. Myself, been doing this for far too long. We use barristers as well, King's Counsel, KCs, Silks. We all know the insurance companies are wrong, but they're just making us go through the motions because it's a numbers game.
So in terms of 6 years, so as long as your claim is before March 2026, and even if it rolls over, you're okay. But you've got to make the claim.
And it's not just making a claim. It's not just notifying the insurer that I want to bring a claim. If they say no, you've missed the boat. You've got to either agree a standstill agreement with these insurance companies, which is
before March 26.
Before March 26, which, in my honest opinion, is not going to happen because they've been fighting these now for the past 5 years. They're not going to agree last minute to a standstill agreement. So then the other way around it is issuing court proceedings against them, and that's something that we're doing.
Again, does that have to happen before March 26?
Yeah. And so the build-up time to that, you can't just go and issue court proceedings tomorrow.
Yeah.
You have to go through the motions, and the courts say to come to us, it's a matter of last resort. You've got to try and resolve the position between the parties before you come to court, because the courts don't want to get backlogged with all of these cases. So it's going through what are called letters of claim, the pre-action protocol, negotiation, etc. So that does take some time. Right,
so just a point of clarity. So
yeah.
March 26 is what I'm looking at. It's too late, I think you're saying, middle of March, to suddenly write to your insurance company.
Far too late.
That's what you're saying.
Far too late.
So I'm now trying to work backwards.
Yeah.
And I'm saying to myself, when...
My advice now.
Nah.
I mean, look, we're less than a year to go. These insurance companies, they'll try and drag it out. And let's face it, you should have had this in your bank 5 years ago. So do it now. Don't.
And so, a risk, let me ask you, we're talking about risk today. So, how much would it cost someone? I mean, they've got to attach a risk attached to it, what it's going to cost them. So, I want to make this up.
Yeah.
So, if I thought I was only going to get 25 grand, but it's going to cost me 30 grand to do it, then, your cost benefit doesn't work out. So, what's the risk attached to going for this course of action?
Yeah.
Because it might not work. Does that make sense? Or are you saying to me...
Worst case scenario, you're going to get nothing.
Okay.
Say you contact your insurance company and they say, we actually do have a pandemic exclusion clause.
Okay.
Fair enough, but that's very, very rare.
Yeah, I think it's
very, very rare.
Because nobody knew of that. Nobody ever thought of that.
Yeah. As I say, there's over 500,000 policies out there that do pay. You could contact your insurance company tomorrow and they'll say no, but they won't give you a real reason. So I'd definitely look into that, definitely challenge it, because let's face it, for most businesses in the UK, the biggest loss they've ever faced is the pandemic. They were shut for the best part of 18 months with lockdowns 1, 2 and 3.
I know all about it, I remember it well.
Horrendous. So there's a policy in place to recover those losses plus interest, because you should be getting interest, because that money should have been in your bank account 5 years ago, earning interest.
I remember, and we're going to finish on this soon, I remember when there was handouts given out, they were only giving them out for people who had a retailing interface with people.
They were like government grants, etc. like that.
Interface.
Yeah.
And I think most people, including me, thought, well, there's nothing for us in terms of insurance or anything.
Yeah.
So it was extraordinary when we bumped into each other, the signature board, and you said, this is what I do. I said, well, hold on. Yeah. There must be lots of businesses similar to mine who, one, didn't know about it, or had probably been told, actually, I think, I can't remember anybody saying to me, you should be claiming.
Yeah.
And that was a revelation to me. And then when you said, well, we need to let as many people, I said, you're absolutely right. So that's when this idea was born. Yeah. And of course, it's one aspect of just risk mitigation for businesses generally, because most times you end up in court is because you haven't done exactly what you said earlier, which is looked at your insurance documents, looked at all your contracts, and any business that wants to scale needs to have systems and processes in place, and unfortunately that means documentation.
It does.
And so really what you're suggesting here is not only is it good for risk mitigation, actually it forces you to systemize and procedurize, if there's such a word, your procedures, so that when you scale, you pass it over to whoever, and everybody knows where they stand, rather than, I think Ninder told me this was going on, I don't know if it is, because I can't see any paperwork for it. So I think actually what you're suggesting is not only great for risk but actually it helps you to scale.
It does. A classic...
And uniform procedures.
It does. And in terms of a scale, a client, a couple of months ago, we'd won her case for her. He said, "Thank you so much, Chris. You not only just saved 30 jobs, so 30 families, I suppose, we actually got by the pandemic in the end. 5 years, this wasn't in our bank account. We'd managed to get through this. But what this can do is take us to the next level. This cash injection, she's opening up another store as a result of it, which then..."
But I think what it does, though, from what you've said, it gets you to question the way your business is running.
Yeah.
And it sort of says, are there holes in the way we deal with our suppliers and our customers? Mm-hmm. And it means anybody should be able to walk in, look at these systems and know where you are. So I think almost what you're also saying is, it's great for protecting you today, but it protects you and allows you to scale.
100%.
Because you're forced to look at everything and protect yourself.
Yeah.
And there are too many cases, which you've already said, is this lack of documentation, lack of process has led to either you falling out with your suppliers, your customers, or actually falling out with each other.
Yeah.
And I know when it comes to succession planning, suddenly memories go a bit hazy when you talk about exiting, selling, moving on to the next generation. The lack of paperwork is what then brings sometimes a fantastic business to its knees.
Indeed, yeah.
Well, listen, I think that's fantastic. So just to remind you before we sum up, so today we've talked about systems and procedures and paperwork that allows you to protect yourself against particularly unforeseen, because there could be a problem down the road with your customer or your supplier. It allows you to protect your business with its employees. It allows you to set up a business in the right way from day one, which protects not only your employees, your partners and their families.
Yeah.
We're talking about documentation. Again, I've talked about suppliers and customers, but also you need to think about your documentation when it comes to protecting your brand and all the various, we didn't go into detail, but all the various aspects of your brand. You've talked about reducing risks from a decision-making process that doesn't perhaps involve paperwork, but interestingly, if you've got the systems in place and you regularly have the reporting systems, you'll spot if you're too reliant on a small number of customers, because the continual checking of documentation, I think, will allow that. And we've talked about potentially risks that you think are out of your control. Actually, if you look at back to the documentation again, if you go back to the documentation, actually some of those risks you can claim against.
Absolutely.
And I think too often, myself included, we don't question our insurance documents.
Yeah.
In fact, I don't know how many people even read them.
Mm-hmm.
It sounds a bit like a business plan when somebody sets it up. So I think one of the things that's come out for me today is it's great concentrating on the sales and the income side and all of that, but actually underpinning that is you need a robust legal set of documents that allows you to continue day to day. And ultimately, if you're missing that, your foundation's not there.
Absolutely.
And I think it's going to come crashing down.
Yeah.
So I think the big one today for me, certainly I've learned a lot today, is look at those documentations, review them regularly, check they're still suitable for today, and I'm talking about tech and stuff like that, suitable today. But for those of you, and I don't think there's many that weren't, for those of you who were affected by COVID, there's an opportunity here for you to check your documentation and to see perhaps the money you lost, the cash you lost, maybe actually you're insured against those losses, and we've just never known. And I think one of the things we hope to do with this podcast series is educate people from people in the know on any aspect of business. And I thought risk mitigation is a key one, and we've gone through them all. And finally, go and check that paperwork.
Absolutely.
Because if you were denied your rights during COVID, you haven't got very long to go.
No.
And I, for one, am going to go and check my documents right now. Chris, I think I've covered everything there. Thank you for your time again. Very illuminating, and it's got me to think a lot about the paperwork we have back, and maybe we should be reviewing that and looking at it, because as you know, anybody in the events game, it's risk all over when it comes to events. There's risks, so many risks around an event. Thank you very much, Chris.
Thank you.
Thank you for the hospitality, and thank you for your time today. And let's catch up maybe in a year's time, and we'll see where we got to.
Absolutely.
With COVID and risk assessments and risk in general. Thank you very much.
You're most welcome. Thank you.